Breaking news. HDFC Bank lost about $16 billion in market value in a few days. HDFC Bank is the third largest private bank in India and the largest bank in India by assets. The spark was a big resignation. Chairman Atanu Chakraborty stepped down. He had guided the bank's strategy and asked tough questions. Inside meetings, views clashed, pressure rose, tempers flared, plans did not match. Atanu was unhappy with governance, oversight, and risk disclosures. Was this only about strategy or about values and control? To many, it looked like ethics versus power. On March 18, 2026, HDFC accepted Atanu Chakraborty's resignation after he cited differences over values and ethics. After Atanu's resignation, markets reacted within minutes. Keki Mistry, a veteran of the HDFC Group, now serves as interim part-time chairman for 3 months from March 19, 2026. Known for prudence and strong governance focus, he's expected to steady the board and guide a transparent transition. Confidence dropped. Billions in value disappeared on screens. Soon, some signs of stability appeared. A few investors saw a chance to buy low. Others stayed careful, waiting for clarity. Regulators, the RBI for banks and SEBI for markets, stepped in to review events and ask questions. Hard questions followed about rules and decision-making. This was not just one choice, it was a test of governance. Atanu Chakraborty is a seasoned bureaucrat. He earlier served as India's Economic Affairs Secretary. He later joined HDFC Bank's board and became chairman, bringing deep regulatory experience. Reports say Atanu resigned over governance disagreements, how the bank should be run and overseen. But the story is bigger than one exit. It is about trust in India's financial system. Consider this. AT1 bonds are special bank bonds that can absorb losses. They pay higher interest but can skip coupons, have no fixed maturity, and can be written down or converted if capital falls or regulators declare non-viability. They sit just above equity in the repayment order, high risk, not fixed deposits. What exactly happened with Credit Suisse and why HDFC is mentioned? In 2023, Credit Suisse suffered a confidence collapse and was rescued by UBS. As part of that deal, roughly $20 billion of Credit Suisse AT1 bonds were written down to zero. Many investors lost everything overnight, even as equity received some value. Reports say HDFC Bank was not the issuer, but some overseas clients, especially NRIs in the Middle East, bought those Credit Suisse AT1s via HDFC's international wealth channels. Allegations emerged of mis-selling, with some relationship managers pitching them as FD-like. Dubai's regulator investigated HDFC's branch, temporarily restricting new client onboarding while gaps in onboarding and suitability were reviewed. HDFC later exited some staff and acknowledged process and compliance lapses, according to reports. HDFC Bank's current stance, operations and governance remain sound. The recent resignation reflects differences of opinion, not a systemic issue. The bank is stable and functioning normally. In simple terms, not a financial crisis, an episode of governance and sales practice scrutiny linked to the Credit Suisse AT1 wipeout.